Hi everyone, today I'm going to be making a video on a company that needs no introduction, Visa, the biggest payments company in the world, fantastic company, incredible network, 3.7 billion cards in circulation, tremendously strong company in a lot of ways, basically has a duopoly in the debit and credit card market with MasterCard, around 50% market share to MasterCard's 30 something. It's incredible market dominance, been accused of being a monopoly in the past and has had regulation against it, has kept on chugging, now a $400 billion company, tremendously strong. I'm going to look at what Visa's plans to do in its future, what its business is, and then looking at some financial metrics, doing a DCF, looking at how it did in the most recent quarter, and then having a look at the stock chart, some basic valuation metrics, and then a risk, and how I see the company performing in the next 5 to 10 years. I'd like to take this opportunity to say if you're enjoying the videos, please like and subscribe and help the channel grow. Visa, in the centre, you can see that this little graphic just shows that Visa's value-add services and compares the core business. Again, the core of the business is consumer payments, credit cards, debit cards, prepaid cards, blah, blah, blah. But the real strength of Visa is this incredible network, and they're trying to extend this network and add key solutions that are attractive to businesses. And I think this is absolutely the case. They're trying to increase the market opportunity. The market opportunity for Visa is absolutely incredible. Total addressable market is, you can basically stick a number on it. It's the global payment industry and global payments in general, which I think is an incredible thing to think about. Looking at some financial strength metrics, I really like to look at cash to debt. Cash to debt for this Visa is just about okay. It's good for the payments industry and this industry in general, but not good for Visa historically, and not good generally, to be honest. It's not terrible, but this is like right at the low end of the investable range in my opinion. Debt to equity is about the same, just okay. Debt to EBITDA, as you can see, this is, as I'm going to talk about in a minute, the margin of this company are incredible. So this is a very profitable company, so the debt is well covered, and is not something I'm concerned about at all. It's not a company that's in distress, as you can see from the Altman score. This is a company that has a strong balance sheet and a high degree of margin safety, mostly due to its incredible margins. And those margins really are incredible. 65% operating margin, 51% net margin. These are strong versus historical Visa comparisons, and strong whichever way you look at it. Nearly 33% return on equity is absolutely outstanding. Really outstanding, but to be honest, I cannot speak enough about these margins. They're absolutely incredible. These are near SaaS levels. These are like low-end SaaS. Even for payments, these margins are really strong, and it shows the true power of Visa, and also shows a kind of risk of Visa. When Visa has this type of walled garden, it can do whatever it wants because it has such a powerful network, and it can charge whatever it wants. You can see the biggest retailers fighting back, as we've seen recently with Amazon, saying that they won't allow Visa credit cards anymore because of the fees. And this is understandable for Amazon's percentage because they have some power over this. But there's more retailers in the world than Amazon, and your mum and dad shops are not going to be able to do this. And most, even smaller retailers, aren't going to be able to do this. It's only retailers that have complete confidence that they have pricing power with Visa, basically. I'm not going to dive into these valuation metrics too much because they don't mean that much to me. P of 30, nearly 37, forward P of 29. Against the wider payments industry, these are high. Like, don't get me wrong, these are high, and you're paying up for Visa's quality. What's most important is these are some of the lowest in history. Visa has always had a dominant market position. It's a resilient company. Like, there will always be global payments. And even last year in 2020, Visa's stock price didn't really go down that much. It's because this is such a resilient company. If you look at the right-hand side, the versus history, a PE of 37 is pretty low for Visa historically. And when you look at its price to free cash flow and enterprise value to free cash flow, these are some of the lowest we've ever seen for Visa. Price to owner's earnings, again, some of the lowest we've ever seen for Visa. So this is showing that although the PE isn't telling the whole story, this is a reasonable valuation for Visa, and I'm going to go into the DCF in a minute. But I think these ratios, to me, don't really tell the full story until you compare them with how Visa's performed over the long term. So I ran a quick DCF calculation on gurufocus.com, doing it on a free cash flow basis, so I just prefer that for this company like Visa. I've used a growth rate of 18.8% for its free cash flow, which is 10-year annual rate. I'm not sure if Visa's going to do this, but I wouldn't bet against it. 18.8% free cash flow growth is a lot, perhaps a little stretch, maybe a bit unrealistic, but I see no reason on recent and past performance to discount. Like, I see no reason why Visa shouldn't be able to do this. I've used an 8% discount for the general market return. That's roughly the long-term return of the stock market, and 4% terminal growth, which is just what I always use. This gives a fair value of $251, 17% margin of safety. The current stock price is $207. This is nice upside in my opinion. This is right about where I'm looking for. This is a really strong business. And this is, in my opinion, this is a rare opportunity to get it. I've done a DCF and MasterCard recently, and MasterCard is trading slightly above its fair value. Both of these are kind of reasonable valuations. I don't mind paying fair value for a company of this quality, but when you get the opportunity to buy them at below fair value, I think you absolutely have to snap it up. So when I say a company that's trading at these type of rates compared to its fair value, I tend to look at the other metrics, the news and things like that, for what is the problem here? Is this too good to be true? And look at the most recent quarter and the predictions. Visa has fully recovered from 2020 and is looking strong. Cross-border volume is slightly up year over year. Obviously, the world isn't moving around as much. People aren't traveling as much as they were in 2019. These are really strong numbers. A lot of Visa's actual profits come from cross-border payments. So these up slightly, that's pretty good. Payments volume up 16% year over year, strong. Visa is a company that will be largely helped by inflation because it's just more payment volume. More payment volume is more profits for Visa. They have really strong margins, so they can extract a large amount of profit from those. So increased revenue, not surprised that for full year 2021, they're growing 10%. I think this is likely to increase again because of that cross-border volume. GAAP net income at 13%. Earnings per share up 15%, non-GAAP 16 and 17. Again, these are all reasonably strong. They're not incredible, but this, you got to remember, this is a $450 billion business. It's not going to blow the doors off every quarter. There's a lot of challenges for Visa at the minute, but I think in an inflation environment, Visa is a really strong company to own. Excellent margins, as I keep mentioning, because that is really important for a company like this. And as long as it maintains its pricing power and its network, it's just an essential company for the world economy. And I can't see this changing. And all of these numbers, when accounting for scale, are absolutely excellent. So Visa's returned 164% in the previous 5 years. This is absolutely excellent growth for a company of now this size and relative safety. Returns have certainly slowed in recent years. It's not really done much since mid-2020. This is kind of to be expected. There's a lot of uncertainty in the market, but valuation has definitely calmed down a bit of late, as we've seen. And I think it's trading decently below fair value. I think there's decent upside as we see it. As you can see, it's trading at the lower end of its 52 range of 190 to 252. You forget that this is a $455 billion business, so that type of volatility, there isn't really much volatility there, to be honest. It looks like the stock hasn't really done anything this year. You forget that in a growth stock orientated market that this is quite normal. Decent dividend, low but growing significantly. They grew 17% in the most recent quarter. They do a lot of share buybacks. I think they've bought back something like 20-something billion worth of stock in the previous 3 years. This is a company that consistently buys back shares and returns capital to shareholders. Not so much in the dividend, but definitely in the share buybacks. Consensus price targets are in the 270s. This is an excellent buying opportunity, and I think I'll be buying some more shares. I'm already a Visa shareholder, and I have been for a while. And I've kind of just sat on the sidelines waiting for some things, because I do think there are material risks to this company. I think the growth of decentralized finance and cryptocurrency definitely is, there is a non-0% chance that decentralized finance gains serious traction. But I don't think this will happen overnight, and this is an absolutely terrible risk, in my opinion. But this is something that is definitely worth mentioning, that I think decentralized finance will be a more equitable system, and there are definitely concerns over Visa and MasterCard's dominance of the payments industry, as we've seen recently with Amazon with the banning Visa credit cards. So use of public blockchains would be a more equitable system for everyone, but of course this is potentially, well, it may never happen, and is many, many years in the future, in my opinion, if it does. And there's obviously concerns with the volatility of cryptocurrencies versus cold hard dollars. So are people going to be spending in cryptocurrency? I don't know. This is not for me to say. I'm not going to speculate on this, but I do think it's worth mentioning that there's a non-zero chance that decentralized finance takes over. And I think this is absolutely worth mentioning and worth thinking about for long-term investors. I think this is a terrible risk in my opinion. I think Visa is a considerably bigger company in 20 years than it is today and still has exactly the same market pull. So just take this opportunity to ask you to like and subscribe. If you've enjoyed the video, thank you.